During 2017, we saw an unprecedented demand for Bitcoin. A gold rush of new users came in a short period of time. In retrospect, it looks like the space was not quite ready. There are a few key changes that have occurred since then that may make the next Bitcoin boom a lot different. Regulations will be more clear. Talk about regulations in cryptocurrency is usually met with groans and sighs. Although some people may see the government's involvement as a negative, there are several benefits to getting more clarity on what rules and guidelines are going to be in place. For one, it lessens that uncertainty that may hold some investors back. Knowing what the government does, or at least doesn't consider a security, gives a green light to those that want to make sure that any adventure into the Bitcoin sphere doesn't result in a total loss because of a government ban or blacklist. Giving everyone a better idea of what the rules are allows cautious investors to stay well within them. The other side effect is that some regulations can start to discourage and weed out certain bad behaviors. In the previous bull run of 2017, companies felt that they were virtually free to raise money from investors without giving much or any legal guarantee or rights in return. We've seen hundreds of projects and billions of dollars come and go with very few results, other than, of course, very unhappy token holders. Requiring companies to register through the same process as penny stocks, for example, would provide at least some oversight and accountability to an area where there virtually is none. Exchanges will be better prepared. During the last half of 2017, exchanges were struggling to keep up. At times, many popular exchanges had to suspend the intake of new users. Some of these systems were simply not built to scale for the level of demand that came. Even if registrations were possible, verification often took days or even several weeks. Since the last boom, many existing exchanges have taken the time to build out their infrastructure for the future. The lull period has allowed them to implement better processes and technologies, such as, say, transaction batching. Not only have established exchanges upped the game, but since 2017, the number of exchanges and brokerages has grown significantly. This is especially important in smaller markets outside of the US, in countries like Canada, where one or two exchanges dominate a national market. Now, a dozen have appeared. Now, just a quick spiel about who we are before we get to number 3. We just launched Canada's first Lightning Network brokerage. Our service lets you buy and sell directly to your wallet, so we don't custody your Bitcoin. If you want to check us out, we have a link below. And if you know someone in Canada who may want to visit us, you can feel free and share your referral link. If you're outside Canada and just here to watch and learn, we'd love it if you throw us a like or follow us on Twitter. All links below. Transactions can be much quicker. Near the very peak of the 2017 boom, transactions were very high across many coins. The sudden influx really put a lot of protocols to the test. In some cases, exchanges had to suspend or delay withdrawal of many popular cryptocurrencies. Demand was so high that the release of the CryptoKitties game on Ethereum's network nearly crippled the network itself and disrupted the ability for most users to move their coins. On Bitcoin's network, the economics adjusted and fees spiked to meet demand for having transactions sent quickly. In early 2018, a second layer onto Bitcoin called the Lightning Network was launched with the sole aim of helping Bitcoin to scale. Not only does the Lightning Network eliminate the need to wait an average of 10 minutes for a secure transaction to fully confirm, it makes the transaction almost instant, allowing users to move their coins in a snap. This new option can ease the pressure on transaction fees and allow exchanges with the Lightning Network integrated to continue their operations without much disruption. Now, of course, the Lightning Network will also help to lower fees. Because the Lightning Network is a second layer, it doesn't require every single transaction to be recorded on Bitcoin's blockchain, and therefore is a way around having to pay a network fee when sending Bitcoin. Usually, when the network fees for a coin spike, it's more expensive to send a transaction from your wallet, no matter the size, unless you want to wait a really long time. This also means that exchanges have to either raise their minimum withdrawal fee to cover costs or suspend withdrawals altogether until the fees drop back down. However, even if the number of regular transactions goes through the roof, you can still use the Lightning Network to send Bitcoin extremely cheaply, independent of network fees. Large exchanges such as Bitfinex have already integrated the Lightning Network, and many more soon are probably going to follow, making it a whole lot easier to take your coins off an exchange at a fraction of the cost.